Hey everyone, welcome to Talk of the Town. This is a podcast where we talk about all things media, creators, business, and more. My name is Tristin. I am the host of the podcast. If you are new to the podcast, thank you for tuning in to the podcast for the first time. And if you are returning from previous episodes, thank you for tuning into new episodes of the podcast. Now, in this episode, we're going to be talking about the massive story that's happened over the last week and a half surrounding FTX and what their downfall means for the crypto industry, the Web3 space, and everything in between. Because, as I'll talk about towards the middle of this podcast, FTX is sort of the linchpin that was holding everything in place, and yet is the one that is probably going to create the most downfall out of anything this year in the crypto space. Now, in order to explain, how this all unfolded, I need to introduce some players to this, situation. First, FTX, one of the most well-known and infamous now crypto exchanges in the world. Alameda Research, which is a crypto trading firm, and also SBF, or Sam Bankman-Fried, who was the founder of Alameda Research and co-founder of FTX, and also ZZ, who is the founder and CEO of Binance. Now, with that being said, essentially here's what you guys need to know. On November 2nd, CoinDesk wrote an article with a leaked balance sheet from Alameda Research, which is, again, the trading firm that SBF created, that basically showed that they were severely illiquid and really sort of in a precarious financial situation, mainly due to the fact that while the company had billions of dollars in assets, it was primarily in the FTX native token, that being FTT. They had locked assets in Solana and other crypto projects, meaning that realistically, it was not looking good for them. Plus, also that they were taking collateral against FTT, right? So they had loans and the collateral was in FTX's native token. Now, once this information started circling, people like ZZ, who had done an equity stake in FTX in the past couple of years through Binance, basically said that they were going to dump the remaining stake of 2.1 billion tokens onto the open market, which, for those that don't know how finance works, that's essentially akin to tanking a stock by publicly acknowledging you're going to sell off the tokens to your biggest competitor. Now, this obviously caused a bank run and a severe liquidity crunch ensued to the tune of billions and billions of dollars, and FTX did not have the billions of dollars that people thought they would in order to have this, and that ultimately led to some really unfortunate things, such as FTX basically going absolutely bankrupt. The news coming out that they had a $10 billion hole in their balance sheet, among so many other things. Now, some of those other things that have been revealed in the past, I would say week or so, is the fact that really, while these companies that being Alameda and FTX were supposed to be completely separate on paper, they were doing a lot of commingling with funds and acting sort of buddy-buddy with each other, which is something that in the finance space you're not supposed to do. For instance, what FTX was doing was many times, and this was allegedly on the behalf of SBF, directly giving money to Alameda that was from customer deposits. So really mishandling and misappropriating customer funds in order to do risky trading with crypto and everything like that, which ultimately did not work out as well as it probably was thought to. And on top of that, we are now also looking at the fact that a lot of companies that were bailed out, like BlockFi and so forth, are having to shut their doors, everything in between. And this is really just outrageous. I think also a lot of people are finding out that SBF is not the type of person that he claimed to be. And I don't want to get into too much specifics of that, but essentially, people finding out that while he claimed to be a very humble and frugal person, he had a 35 point something $1 million penthouse in the Bahamas that 10 different people that were working with FTX and Alameda all lived in. Some of them were all romantically involved with each other in the past or present, things like that. And also, some of the most recent news, that being that essentially FTX got hacked, whether it was internally or not, and had a $600 million loss of customer assets taken from them overnight. Now, moving from there, essentially, I want to talk about what this says about the crypto space and also what I think it means for the future of the crypto space. Because, again, like I mentioned, FTX was sort of seen as the number two crypto exchange in the world, was on top of things. Nobody could really ever expect that this kind of thing would happen. I mean, even I myself, if somebody came to me and said FTX would be, accused of doing all these, possibly illegal things or very unethical things at the least, I probably would call you an absolute liar for believing that. Now, ultimately, here's the things. Like I mentioned, FTX was essentially a linchpin that was waiting and bleeding from the inside, and it's really sad to see what has happened, right? Essentially, with the downfall of FTX, there's a lot more scrutiny that is going to be in on the Web3 and the crypto space, which is definitely overdue. But also at the same time, what I think a lot of people need to realize is that this industry is also just not taking any chances anymore with different people, even if they were reputable or not. And on top of that, I think that another thing that really shows, how much of a linchpin FTX was is the amount of companies that they bailed out and everything in between, right? And it is quite literally shocking across the board, right? You're talking just outrageous things. Like BlockFi was bailed out by FTX, Voyager bailed out by FTX. Both of those have essentially gone belly up. You look at projects like Solana that were invested into by FTX. There were hundreds of companies that had investment from FTX or from SBF directly, and that could be a really big deal. On top of that, FTX had over 130 different entities across the globe, right? Which is a way more complicated structure than Lehman Brothers, the company that created the 2008 financial crisis had. And I think that that says quite literally a lot. Now, on top of that, what I think being the linchpin of the crypto and Web3 space right now also means for FTX is that it is going to really create a domino effect where we are seeing crypto prices at somewhat of a unpredicted low. Again, you're seeing a lot of companies who are having to be very open and transparent about their assets and obligations to customers and everything in between because of this. Now, ultimately, what do I think that this means for the future of crypto, of the Web3 space, and everything in between? Personally, I'm happy that we are rooting out and taking the bad actors of the crypto and the Web3 space away from the industry. Again,